I think it's all set and I've started the webinar. Quickly, can I get some confirmations from you in the chat box? If you're able to hear me clearly, some confirmations will definitely help. All right, perfect. All right, then. I will take the liberty to quickly keep a backup of my recording of our webinar today evening, just in case some issues with Zoom recording, I can always have a backup. So yeah, I think we are good to. So here we are. Let's start this webinar. We are on the 9th of April, just the beginning of the month. We've got a lot of holidays. Wednesday evening, 6 o'clock, and you got trumped. I thought that this is a pretty decent title that I can think of. Of course, a lot of us will be in a lot of doubts, dilemma, fear, what's going to happen. So I just thought that why not take the liberty of opening up for an hour and discuss with everyone. I can see very clearly within our participants, a lot of right tribe participants, prepped traders are here. I wanted to keep it very close, as close as possible. And that's why I did not give away the link to everyone, so that the event, the meeting, the discussion is meaningful, right? First and foremost, disclaimer. So whatever we are going to discuss is purely informational and for educational purpose only. The securities will be displayed and we'll discuss are primarily going to be macro charts and indices. We are not going to discuss any stocks whatsoever. So they are all for illustration and are not recommendatory. We do not bear any responsibility for any trading profit or losses you might incur as a result of using these concepts that we will discuss in today's webinar. And we are not advising any trading or investment ideas. Before taking any trading decisions or investment decisions, please do consult with your financial advisor, right? So I was just noting down some points today afternoon that what should be a nice, crisp way of conducting or just taking this webinar through. So I just thought that let's break it down to two main categories, right? Let's talk about facts and figures. Let's talk about things that are clear right in front of us, okay, that we are aware of, information, data, percentage fall, biggest loser, close to 200-day SMA, means whatever information we can attach to some data, facts and figures. There are no ifs and buts. Let's discuss these first. And in the second half, let's discuss which are not facts and figures. Our greed and fear. It's a fact, but I cannot put it figuratively. The uncertainty, how deep can this fall be? So let's first discuss facts and figures. Now, when it comes to facts and figures, we can further, divide this in terms of price-oriented facts and figures, like more technical in nature. We will discuss those. These are price related. So we will take a look at sectoral losers, gainers, relative strength, RRG graphs. And then there are, which are non-technical data and primarily data and macro data. Data and macro data will have your FIIs, their trend, We can take a look at other macro data like GDP, and TradingView does allow a lot of these charts, and we can discuss them, right? I think that's how I thought that I will, uh, stage by stage discuss um, how bad is this correction at the current juncture, and uh, how can we prepare ourselves. So let's start. It's a it's exactly not ironical, but I had not thought about it. But today we had the monetary policy. And I think it's a good starting point when we are talking about macro and facts and figures. So I just took us, took a look at one of the post the monetary policy write up. I was reading on that. And it's right here in front of us. For some reason, it's not getting crossed. I'm going to mark few important pointers. These are going to be our starting point of facts and figures, macro related. So we have a repo cut, number one. Is that all right? So we have a repo cut. That should infuse a little bit of further loan giving propensity to the financial institutes that might help the overall economy to stay afloat. What are the other things? Now, it was a 25 bips cut, and I think they can go with a couple of more depending on how things unfold, right? Important thing is this line. He also said that India's GDP was seen growing at 6.5% in FY26. The inflation was forecast at 4%. However, the central bank's rate setting body can't sit at ease after US President Mr. Trump's announced sweeping tariffs. So the growth estimate has been taken down, and you talk to any economist or any banker, sensible banker, most of their narration will be very similar. And that is, um, we are pulling our estimates down. Few by 0.25%, few by 5%. Few would like to take it down and wait for another quarter. Earnings will come up. We would like to see that this extra cash that the banks can pull out from the central bank, how well will it get deployed, etc., etc. If you listen to them, if you listen to our governor also, you will see that uh, that everyone takes decisions, revisits their decision based on what I decided right now and what happened. Right? It's not that I'm taking a decision because I know everything. He is, to a lot of extent, also uncertain about how things will unfold. So you and I, if we are uncertain and we have a little bit of fear, I don't think so. It's a very unnatural thing. It's completely healthy. So we have to keep this back of our mind that it's probably not going to be a very smooth growing economy going forward. And we are the beginning of the first quarter of this FY. So let's consider step by step. Let's consider 3 months. We can revisit You Got Trumped Part 2 after 3 months. We can do it after April, May, June. That quarter is done on the 9th of July. If you're free, you can join. You can remind me. We can do a You Got Trumped Part 2. Whatever we are going to discuss today evening, we can revisit it after a quarter, right? So fundamentally, macroeconomic point of view, things seems to be slowing down. There are few good things. Inflation is manageable. There's another good thing that if you take a look at crude has corrected quite heavily. Crude has come off quite a bit. This is the monthly chart. This is the weekly chart. And it has finally given that pretty decent breakdown over here, though it's coming down to that 2023, early 2023 lows. But overall, manageable crude level. USD INR is back to 86, 86 and a half and above. and I think it's going to stay higher. Okay, the charts, we will revisit the charts closely. I'm just putting down few macro tiles, few basic macro tiles. When you talk about the GDP, um, downward estimates. When you talk about the inflation, very much manageable. When you talk about crude, yes, it's correcting. But when you talk about USD INR, when you talk about dollar, it seems like rupee will continue to depreciate. So these two will not affect that much. Overall, inflation should be manageable. Earnings, we need to keep an eye on that. And theme wise, if I talk about a theme, I may be wrong. I'm not an economist, though I've studied that subject pretty well. Um, Theme wise, what I think seems to be the nature is the fact that if I'm a company and I'm producing any goods and service within the country and it is getting consumed within the country and my raw materials are also coming from within the country, I think that's the kind of theme that the market would like to look out for. The market probably will not want anything which has an international exposure because you never know. I think so. This is just a thought. So we have to keep an eye on this particular theme going forward. So before we go to that technical side of facts and figures, the macroeconomic data point of facts and figures is okay. We've got a high to low 20% correction, very uncertain, primarily because of Donald Trump's tariff war. Now, let's talk about, I want to talk about one more thing before I straight away go to charts and discuss these levels. Corrections. Let me open the chart of Nifty. Okay. And I would like to open the monthly chart of Nifty. And I want to go back as far as, let's say, 2007, 2008 correction. Middle of these, we had some corrections. This is your COVID correction. This is a mild correction during 2022, 23, then the final breakout, and now we have a high to low 20% correction. We're going to break this down. I'm going to see how these corrections were in terms of the nature of percentage fall, number of months they took, etc., etc. In fact, number of months they took to recover back. We're going to dissect this chart thoroughly in some time. What I want to share with you is the reason of this fall will be different from the reason of this fall. The reason of this fall will again be different from the reasons of earlier fall. So when I was studying technical analysis 20 years back, I figured out one thing very clearly, that technical traders do not give a damn and do not care what is the rationale or the reason of the fall, because price discounts everything. The reason I'm sharing this with you is, what was the reason of the last fall? COVID. What is the reason of the current meaningful 20% fall? A man-made driven correction, which is essentially, let's say, a choice, a decision. A person is trying to get its country back on its feet just to produce something. It's easier said than done. Um, But if someone finds himself that he had taken a wrong decision, or whatever decision he had taken, it's not playing out, he or she can always turn it back, right? So compared to a COVID where there was a lot of uncertainty, no one knows what's going to happen. Over here, we may get a V recovery. You never know. Market, if anything positive comes, market may like it, especially directly from the reason from where it is happening. Okay. So we'll keep that back of our mind. And this was a blunder. This was a disaster, of course. Let's break this down. I think we can go to the technical facts and figures. So fundamental macro facts and figures, equity as an asset class is correcting across the board. If this is the Nifty chart, and if I show you the NASDAQ, if I show you the Dow Jones or the S&P 500, if I show you the German market, the French market, the British market, Asian markets, this is Nikkei. Hang Seng, on the other hand, would be relatively choppier. Crude, as I told you, is correcting. Some crazy price data over there is correcting. Gold, on the other hand, is enjoying. Sorry, this is natural gas. Sorry, this is gold is enjoying the move. Is that okay? I think this is going to be the trend. Now the question is how much can this fall? Where can be the supports? And if that's the case, which sectors to look for? I've discussed the theme with you. Let's go back to the Nifty chart. Let's do this step by step. So I'm not going to go far beyond 2007, 8. This was one hell of a beautiful rally. I was a part of it from this point. So yeah, it's been a long time. So I'm not going to go beyond 2007, 8 because before that, there were a couple of the dot-com, Harshad Mehta and KP's bubbles and scams. So let's not go there. Let's stick to this point. So the worst correction that we have seen so far from a high to low basis, highest point to the lowest point, in a matter of 9 months is your 2008. It's around 64% high to low on the index. However, these points are, when these lows happen, there are lots of panic. Markets do not trade at that level for a long span of time. Markets did try to settle somewhere there. So even if I pull it up to somewhere average, some kind of average, it's around 60%. तो अगर मार्केट आधा भी हो जाता है, if the market's half, you and I should not be surprised. Because you and I, both of us, have seen this in the past. I have personally lived through this in the past. So if a 26K comes down to 13K, of course it will be painful. Of course. But it should not be something that, oh, what is happening? I just don't get it. That should not be the case, at least for you and me, because we've seen it. Let's compare this with the COVID, shall we? If we compare that with the COVID, that was a very sharp reaction of just 2 to 3 months. It was a pretty sharp one when it comes to percentages, 40%, high to low. Again, it doesn't stand there or stay there for a long. Over here, 2008, 2009, if I'm not mistaken, 9, Jan, Feb, March, it took some time and bottomed out because it fell quite a bit. It took some time. COVID was something else. It just spiked up, money getting pushed into the system, and it just bounced back really, really sharp. But nevertheless, you've got a 40%, you've got a 60%. Okay, so 50% from the last two major corrections. What about the ones which are more or less are the time pass ones? This looks like that so far, so good. Chaliye dekhte. This will be interesting. Correction number 3, which is during this is November 2010 to December 2011. We're looking at a 30%, 28.75, and spread across 13 bars, 13 months. So 1 year, 1 month, 30%. All right. What about this one? Let's figure this out. So these kind of study, which we're doing right now, has some meaning and also meaningless. I'll tell you both the sides. 25%, again 1 year. So this lasted for a year. This also lasted for a year. And they were very similar, 24%, 28%. What I'm going to do is I'm going to mark them with these vertical lines, high to low. I'm going to mark these also high to low. Then comes COVID, and then comes this correction from which we got this breakout. चलिए वो भी देख लेते हैं. Let's take a look at that one. And if we come to high to low, it's around 18.75. So again, around 20% correction in a matter of, I need to zoom in here, 8 months. Let me mark that also as well. Okay. Now, if we compare these situations with our current situation, zoom in, fast forward to the now, And 27 September 2024, the market topped out. Recently, we have a low. We are around 18% in 7 months. So when you bring some perspective, it doesn't feel that bad. It's like that. Uh, the example which I generally share. Um, let's say you failed in your maths exam, you're feeling really bad. And then you figured out that the guy who was really good in the class in maths has also got really low marks or he has also failed. So the moment you bring some relativity, perspective, you don't feel that bad. I'm sure it has happened with you also. You felt it that way. Coming back to the Nifty chart. So a 20 to a 24, 25% to 30% correction spread across a year is something that the market has seen. And before that, if you notice, markets have given you from a low to high, decent rally. I'm not going to drop the info line again and take some time because I want to show some more things, some interesting things. So natural correction, if there is a pure caveman technical analyst, a caveman technical analyst is he or she doesn't look at news or anything whatsoever, only price, then he or she wouldn't even know why this correction is happening. He wouldn't even know. And he doesn't even care. All that he sees is a correction, right? And it's okay. It's normal. Every time I see the markets rally like this, there is a need for a healthy correction for the Nifty PE to come down, for the valuations to kick in a little bit, so that the FIIs and DIIs, the FII especially, find relatively attractive, etc., etc. Fine. So number one, the outcome of this quick past price analysis, you shouldn't be too worried. You shouldn't be too scared right now. Number one. Number two, I did say that these kind of discussions of the past price behavior it has some meaning and it's also meaningless. The meaning is it gives you some perspective. Now, this study does not mean that the market cannot fall 60% or even 75%. This does not mean that it will be only for 1 year. It can bounce back from here also. So anything can happen. We're just trying to pick some realities of the past so that so that we can prepare ourselves for the future. Our preparation has got no correlation to what's going to happen in the future. So the meaningless part is anything can happen. The meaningful part is we have some perspective, some perspective to be precise. Now, with this in mind, now let's do some supports study, and then we'll discuss some sectoral behavior of this particular correction. As you can see that if I remove this vertical line and the info line, as you can see that this rally, which the market is reacting or retracing right now, essentially came from this, if you like to call this, what is this? A cup and handle breakout, throwback, rally. It's a copybook, classic technical analysis, price behavior. Wonderful. Throwbacks can take prices back to the level from where they broke out. Highly possible. Throwbacks generally come immediately. And if they hold, for example, if I zoom in, breakout, consolidation, upside, retest of the breakout, follow through move. So these levels were tested, tried and tested, and they held. So quality check done, okay. Which means if prices comes down in the near future, anytime, these prices, which was a resistance and a support, should offer support. May or may not. So this is not a bad level. Now, sadly, this level is significantly below our current price. It's sub 19K. And if I draw an info line, if I draw an info line, something like this, a straight, angular line, something like this, then we are looking at a 28% correction in 1 year. If this has to unfold, I also again will, both of us will think that it's okay. I've seen a 1 year correction around similar lines, 25 to 30%. That's exactly what I typed some time back. So this kind of study prepares the mind of, if such thing unfolds, we are okay. Iska matlab, today, if I'm buying, I'm not going to buy heavily. I'm just getting some, you know, data in place, some supports in place. So this is a pretty good level. This is also a congestion. So a high of this, you should be keeping that in mind. This is the June 3rd election result low. I'm not paying a lot of importance to this, but you never know. In my past, I've seen such freaky lows getting some seriously uh, good, peculiar, uncanny support, which means that as I roll back, and if this is my fractal low, if I bring in my fractal indicator, and if this is my mega fractal low of the 2008 correction, and this is the COVID low, what if I take a line and I join this? What will I get? I had seen this in my past 2008 correction. It tends to have some importance. Way below, let's not get into that. It will sound little scary, but but इसको तोड़ने के बाद, if I draw this line, this is getting broken. If I talk about pure technical trend line technical analysis, इसको तोड़ने के बाद, the next meaningful trend line is this. Whoa, okay. Let's keep it on our charts. Let's not, as we discussed, we can take it 3 months at a time. We're just preparing our charts. So what is the charts telling us? Bring in some momentum indicator, not looking good. Bring in some pure price behavior, not looking good. What happened in the month of March? If you notice, after 6 months, 1, 2, 3, 4, 5, after 5 consecutive negative months, the sixth month, the month of March, was a positive one. The market bounced back, 6.3% rally. CNX Finance was the biggest gainer, all-time high. All gone in a matter of just a week from the month of April. Not a good sign. Not a good sign. When I see things like this, it tends to tell me that the market purposely went up to liquidate itself. And if the market reverses immediately, it wants to go further down. So price behavior wise, not looking good. Price analysis, correction analysis from the past tells us there is scope of downside. Typical technical analysis, supports and resistance kind of work also tells us that it looks like there is enough room for the market to fall. Will it fall sharp? That can only happen because of some further fear or panic. Or will it be some kind of a staggered correction? Maybe after that, some kind of a soft landing. I have no clue. As most of the analysts and experts will say, we will see how it unfolds. It's just too early to comment on. Before I take you to the sectors, all the discussion that we have done in the first 30 minutes of today's meet and event, don't be in a hurry. Let me make a couple of assumptions. Number one, these corrections are good for whom? For whom? For someone who's been sitting on cash, for someone who's been looking for a correction like this to build a long-term portfolio, to add to its long-term portfolio. It's for him, a long-term investor. An old one who's looking to add more, a new one who has just come entered the market and is looking to add and build his portfolio. It's good for him. So what is the takeaway of the first 30 minutes discussion? The takeaway is, do not haste. Do not haste. Identify some sectors, identify some stocks, or maybe if you do not want to get into stocks and sectors, just go for ETFs and index funds. Just go for ETFs and index funds. And let's say break it down into 3 or 4 parts and take it step by step. Every month you can add some as it comes down. if back of your mind you're thinking market's going to bounce back from here and we are not going to see these lows ever again, I don't think so. As of now, whatever we discussed, we don't think so it's going to happen. We think that there are lower levels in the making. That's number one. Number two, who's the other person? The other person is, let's take three examples. The other person is a long only trader. Long only trader, not an investor. Okay. Difficult, frustrating times. If you are in this category, you would have definitely have got yourself really frustrated over the last 6 months. You've got a good March, but to catch that was not easy. To catch that was easy. To exit from it was not easy. Those who are there in prepped and in right tribe, I kept on saying that, do not get carried away with the long trades. This is the time when offload your short-term trades. So long only long only trader, wait. Again, you go back to that mode. Patience is a virtue. You wait. Things are not looking that good. Wait. Number three, wait for what? Wait for the trend to reverse a little bit. Wait for similar kind of a setups which you got early March. Take a look at March charts, early first week of March charts, and try and figure out what happened there. You will notice that finance, bank nifty, private banks led the move, trend reversed, consolidated, zoom, the next move. So wait for those kind of formations, especially when you have divergence, which means you have to wait. And the third one is the bi-directional long short trader. This guy is okay, but he or she will get confused because at times he will get long trades also and will look to short the market at higher levels. Considering that the overall view is still down, I would suggest focus on short trades. Do not be in a hurry. Wait for the market to go overbought maybe, and then look to go short. Right? Now, can we go to the sectors? I will finish whatever I have thought of discussing with you. I'll just quickly take a look at the notes, and then if time permits, I can take a look at your questions. If you're a part of Right Tribe and prepped, then it's better you don't ask any questions, because today is Wednesday evening. We have our Wednesday session right after this, 7:15. So I can take up all your questions. That's exactly what we do, right? However, if you're not a part of prepped, if you're not a part of Right Tribe, and you can ask a question, I can definitely, if time permits, we can definitely take a look at that. Now I'm going to toggle between a couple of softwares. You would know that Strike Analytics is a software which I was unaware of, but thanks to our community member, we figured this out, and it has RRG graphs. Since then, I've been using it on and off. It has few good features. One of the features will help us today's webinar to discuss few aspects. I'll start with the heat map. See this heat map? Okay. And we'll start with indices. Nifty indices, essentially the Nifty various sectors and themes. Then we can figure out the time frame, what we want to select, and accordingly the percentage change will change. And if we click on any sector, the sectoral stocks will open up in a heat map manner, and we will be able to identify some pockets of strength and pockets of weakness. Okay, let's do this. But the point is, what should we consider as our time frame? Why not go to custom and go back to 27th September? I think that's the date, 27th September to today's date is 9th of April. Let's apply this. 27th September, 9th of April. So that's the highest point of the market, Nifty. And let's take a look at what has happened to the sectors. Realty, media, energy, auto. Okay. These calculations are close basis. They are not the info line which I was drawing, highest point to lowest point. These are not like that. These are closing basis. So आपका निफ्टी number will be smaller than 20%. Where is nifty or the nifty total market? You can see the nifty total market made up of 750 stocks, 17%, and nifty भी आसपास ही होगा, ये रहा 14.5%. Do you see the positioning of Nifty total market and especially Nifty 50? Do you see the positioning? Look at the list above that, that is worse than Nifty 50, and look at the list better than Nifty 50. So the breadth of the fall has been significant. A large chunk of the market is coming down. A very small chunk of, or small chunk, nahi, small part of the market is kind of falling less than the market. These are your relative outperformers. Though they are falling their relative outperformance. Our RRG graphs will show that. Don't worry. So what has happened? Realty, media, energy, auto, oil and gas, then the micro cap, IT, let's say 20%. There's a lot of stocks, a lot of sectors, I'm sorry, which have fallen more than 20%. These are on a close basis. Nifty has by this time fallen 14.5% on a closing basis. Our infoline drawings were on high to low base. Now, out of this, banks, financials make the maximum of the market. Then there's IT, then there's energy. So let's say if I click on energy, the moment I click on energy, the Nifty energy constituents during this period comes up, and I can see the worst hit and the least hit. All of them are red. I don't have any single green, so they are deep red. So Power Grid has fallen around 17% during this time. Of course, it will be an outperformer because 29% is the index sector fall. And Adani Green and Coal India are 27% and 56% fall. Okay? If I do this, I will find, let's say, Power Grid, NTPC, BPCL seems like relatively, it has fallen relatively lesser than a 29%. So what I should do is I should check the Power Grid chart, I should check the NTPC chart, supports, and that's one way to deal with that. But in this time frame, most of them will be very, very red. IT is of certain importance because after the banks and financials, IT enjoy the maximum weightage. Again, 23% correction. The least is 8.8% from Coforge, Wipro 12%, then straight away goes to 19% persistent and 33% LTM, emphasis 31%. Infosys 26%. Let's spend 2 minutes extra over here. We will discuss the RRG graphs. What I'm trying to express and explain over here is if your thought process is IT is cheap, IT, I'm liking it, then which one should I go for? Right? Should I go for the one which is hit the most, or should I go for the one which is hit the least? If you ask me, always go with relatively stronger counters. But that does not mean you blindly go with Coforge and blindly leave LTIM. You select Coforge, you go to that, I cannot discuss in detail of stocks, but I'll just take this liberty to just explain one chart with you, that you open the chart of Coforge and you check that where lies the levels. Does that level has any importance or not, right? You can also check what are the kinds of corrections Coforge has given in its past, let's say a decade. A nice way is if the RSI 3 has fallen below 20 or 25, especially if the 3 of 3. Of course, if you're not part of prep, you'll not understand this jargon. But if you're part of prep, you know what I'm talking about. If you see a 3 of 3 making a divergence like this, of course you can add, of course. And if all you don't want to time, the best thing I would suggest is go for the Heiken-Ashi, wait for the sell-off to cool off, wait for the positive shadows to come, and then you start adding. If they fall and they start to cool off again, then you add some more. That's the way to deal with it. Just do not blindly go with these numbers. Evaluate the chart. If we take a look at IT, I can talk about sectors, no problem. If we take a look at IT, one of the finest looking breakouts or charts we had 8, 9, 10 months back. Things have unfolded really bad. So before we take a look at IT and especially the banks and FMCG, all these candidates, can we quickly check the relative strength positioning with the help of RRG graphs of these sectors from a long-term point of view? पहले वो देख लेते हैं that how bad is IT placed? Can we quickly check that? So I come to RRG. I have indices. I take the benchmark as Nifty 500. I increase the time frame from daily to say weekly. I can do monthly also. Weekly is fine. The correction is from 27th of September. So October, November, December, Jan, Feb, March, April. If I take up, stretch it towards 27th of April, less than 20 days to go, it's around 7 months. It's around 7 months. 7 months, 7 4s are 28, around 28 weeks. So if, let's say, if I increase the tail to 28, yeah, and I fit it, it looks clumsy. It looks quite cluttered. So let's go for monthly and let's reduce the monthly to around 7 months. Dekhte, let's see. Do we get anything interesting out of the RRG graphs? Yeah, this is much more cleaner, isn't it? Than the weekly one. Yeah, this makes sense. I'll touch with IT first and then I'll discuss the rest. Where is Nifty IT? That's where you are. Which quadrant are you in? You're in the improving quadrant, which means that the IT's relative strength and the momentum of the relative strength are slowly improving. Please remember, we're talking about the last 7 months. But the index has come off, yes, but with CNX 500, with Nifty 500, it is in the improving quadrant. So relative performance is there in IT. I cannot compare it with just 1 or 2 weeks. If I take a look at the long-term charts, if I take a look at the long-term improving, long-term RRG graphs, the improving ones, essentially घूम के कहीं ना कहीं leading में आएगा ही आएगा. It is very unlikely that from improving, it can go back to lagging, but it can never go back like this. It has to go this route. So it can, from improvement, it can go to lagging, it can do a lot of drama, but eventually it will come to. So when I see this, I don't feel that bad about IT. Okay, by the way, who are the other candidates who are in the improving quadrant? We're talking about long-term RRG graphs. Financial services looks brilliant. Look at that curve. Private banks looks interesting. FMCG looks interesting. And this is Nifty, Nifty 100 and Nifty 200. Out of the sectoral ones, you have IT, Fin, private bank, banks, FMCG. These are all angling up, and especially financial is going up like this. So these are the ones that perform the best. You remember the heat map on the downside? Below Nifty, it's all financials and private banks. So this is a good point. It's also a scary point. We will discuss both these before I finish the event. So going forward, if you rely on relative strength index, this is the pocket. This is one pocket. This is the second best pocket. Sorry. The first best pocket or the best pocket, there's nothing called first best. The best pocket is this guy. Healthcare. Can you see healthcare? Looking phenomenal, beautiful. Pharma looking beautiful. Consumer durables losing a bit of momentum of the strength, and India consumption. I'm not too sure what is there inside India consumption. We'll check, but you get the picture. The consumer durable consumption theme जो मैं भारत में बना रहा हूँ, भारत के रॉ मटेरियल से बना रहा हूँ, भारत के लोगों को बेच रहा हूँ और सब डोमेस्टिक ही है. आत्मनिर्भर kind of a ecosystem. I discussed this at the beginning of the event. So keep an eye on India consumption, keep an eye on consumer durables, keep an eye on the FMCG, keep an eye on the banks. Now banks में थोड़ा सा caveat है. I will come back to that later. कीप एन आई ऑन द फार्मा. फार्मा तो भारत में भी बनता है लेकिन बाहर जाता है, बट फार्मा इज अ डिफरेंट ब्रीड. The country, the exporting companies, the importing countries will need the medicines. It's not a scotch or a butter. This is medicine. So now you know where to look for. For example, I'll do this exercise for you. I'll come back to RRG. I go back to heat map. There's so much can be discussed, but I have got an hour just. I go back to heat map and I go to India consumption. I click on India consumption. I see that the index is down 17.5% since the top of 27th of September. It's more or less in line with the Nifty total market. And then I see Max Health, Indian Hotel, Indigo, Aisha Motors, Bharti Airtel are doing relatively much better. That this does not mean all these stocks are buying. Please do not, misunderstand me. These are your pockets of strength. These are your pockets of huge corrections. These guys can bounce back. These guys can fall. But if you go by the relative strength logic, and if you find a max is still looking good, it's a much better call. Personally, I did take a look at Indigo. I did not like it today morning when I was taking a look at it. But Eicher Motors can be an interesting one. If Hero Motoko and Bajaj Auto are down 40 and 39%, and Eicher Motor is up 3.87%, it tells you about the company, about the stock. This is what I just want to explain and express to you. Rest is up to you. I cannot tell you to buy and sell. Just understand the difference, right? You can go for the pharma. I can quickly click on the pharma. During the same period, what is happening? Laurus Lab is up 21%. And then Abbott is just down 0.5% and DV is down 1.3%. The worst is 47%, which is Natco Pharma. So it's not across. If you're a little bit into fundamentals, you can check that what makes Laurus Lab go up 21.5% during this period, right? And how well is Dr. Reddy placed, or when it comes to Sun Pharma, these are the biggies, how are they placed? Going back to the RRG graph. So, India consumption, consumer durables, again, the same theme, FMCG, healthcare. And yeah, if you think there is merit, if it's India consumption, and if there are cement stocks or stocks which are pretty healthy does not have a lot of exposure to the tariff war, then definitely you can look at them. The ones which are on the right hand side, the biggish, longish list of weakening. Weakening generally leads to lagging. Eventually, they can go up a little bit, but eventually they will. And that's a long list. And in this long list, you can see PAC, you can see Realty, the mid and small caps, the PSU again, auto, small and mid caps, a lot of mid caps indices, manufacturing, not a good sign, oil and gas, metal, commodities is also there. So you get the picture. The small and mid cap mega rally that has happened in the past is lagging. So if you're back of your mind, if you're thinking, okay, I'm going to take a look at the small and mid caps to add to my portfolio, I don't think that's a very good idea right now, unless if it's from a consumption story or healthcare or pharma. So keep an eye over there. These sectors are slowly weakening. It does not mean that they will not give a bounce back. They will give a bounce back. A trader may want them to trade the bounce back, but from a long-term point of view, they are heading towards, like the way you can see energy has head down, where it was and where it is now. If you take a look at the CNX energy index chart, of course, you will know it looks pretty pathetic, especially if you take a look at the weekly chart. So small and mid cap, micro cap party, I think, of course, it is over, but I think it's going to extend further down. So try and stay away from that. Again, the PAC, CPAC, those kind of themes are not there. Realty, auto, and manufacturing. Yeah, this is a little pain point. So that's lagging. The only one, a few of them, which is there in the lagging, completely lagging, is media. I'm not a big fan of media stocks. Never was, never will be, I believe. Few which has just entered is MNC and energy. Energy, I can understand. MNC, I don't track that closely. I'm not too sure what goes inside that particularly. But energy is now clearly in a lagging quadrant. So you need to go to the energy quadrant. Let's say I go to the heat map. Yeah. And I go to the energy and I click on this. It'll be all red, 56% and 17%. The least fall is 17%. That's more than what the Nifty has fallen. That's the kind of underperformance. Now, there are two types of traders and investors that will come out of this kind of a reading. One, it's a very weak sector. I will stay away until and unless it gives me some sign of strength. This period is since 27th top. We should do, I should ideally do a similar kind of a analysis in front of you for the last 5 weeks. I should do, because you should be able to figure out which led the sectors which led in the month of March and they're holding well. That is where you should look for some. So one way is weak sector, stay away. Another way, another mindset is very cheap, very, very cheap. Show some guts and buy or go long and all that, long term, long term. The second category, I strongly suggest you have to be a good contrarian trader, contra or contrarian trader. Again, if you're there in right tribe with us, of course, you know what are contra trades. Take a look at the monthly charts, look for some divergences. If you don't understand them, don't try to be a cowboy here, because it's going to hurt bad. Now, I don't have much time left, but I did tell you that the next exercise that one should ideally do after this is go to week uh, custom and say March, let's say 3rd of March to 9th of April. Okay? Yeah? Can we do that? And now things looks much better, because since March we've got a bounce back. PAC, will you be interested? Yeah. So PAC moved up the maximum. And then what you have to do is you come to RRG graphs, or I do this. You may not have access to such softwares, but again, you get the picture. You have to figure out that during the last weeks and 6 weeks, fit it and see where does PAC find, what are the leading ones. These are the leading ones. Which are the improving ones? So PAC is in the improving quadrant. There you are. So are you going to go towards the leading? So now I will go to the PAC. Now the software is not as responsive as I would have loved it to. And then I might check, okay, what are the points? How is Coal India placed? Is it close to supports? Has the Heiken improved, etc., etc. So long-term picture, not so good. It clearly shows that there is clear uncertainty and the markets can just fall off its own weight for maybe a few more months or quarters. So don't be in a hurry to buy. Do your analysis, find some good quality stocks. If they come close to decent levels, that's where you look to add. If you're planning to add, just add a small quantity, maybe 1/3, and wait. And maybe another 1/3. And then once you've done the third time and you're exhausted, after that, aap haath utha dete ho. After that, you leave it to the market to unfold. But I think amidst all of this tariff things and international global, uh, it's a global event. It's essentially a global event. It's not a domestic event per se. So I think those stocks which are generating earnings predominantly from domestic consumption, I think, I don't know why Indigo is going up and behaving so well. Keep an eye on those kind of names, right? I thought I'll be able to cover a little bit more, but I was pleasantly surprised that in just in 1 hour, I could do this. There are a few more things that we can discuss, like a ratio charts. This software's ratio chart is not that good. There is something like a GDP chart with the with the 2 year and the 10 year government bond yield curve. You can keep an eye on that. Maybe we can do it some other day, or if we do a you got trumped part two after 3 months, maybe I'll cover it in 90 minutes rather than 60. Right? I'll quickly take a look at the questions. I've got 5 minutes left. As I said, those who are part of Prepped, we have our Wednesday class in just 15 minutes. We can discuss in detail then. Those who are not part of Prepped, feel free to ask me any questions. I'm quickly taking a look on my screen to my left where I have the chat box. Ayan has joined. Ayan, good. Vijay has also joined us. Great. Aniket, when we build position in ETF, how do we position ourselves? Um, See, creating a position in ETF is not necessarily a trade, it's an investment. And ideally, it can be done in a falling market. It can be done in an SIP manner also. You average out the entry prices. But the way to do this is I had done this research a decade back, and I found out that the Nifty Bank Nifty in a bearish market can give you opportunities around a dozen times, 10 to 12 times in a year. So if you're planning of, let's say, I want to invest 1 lakh rupees in Nifty Bs, just an example. Break it down into, okay, what kind of a market is it? It's a bearish market. So break it down into 10 parts, 10,000 rupees, 10,000. So every time your criteria meets, every time it goes oversold, 10,000, 10,000 karke aap dheere dheere position build. That's one way. Someone can do it in 4 parts or 5 parts also. I said, hope everything is fine. I'm doing good. Just entered commodity segment since last month, gauging pulse of commodities. One thing I want to ask, we were doing first fractal breakout after trend change with sync to momentum. Yep. Can we go short? Can go for second fractal breakout if there are no divergences? Yes. Yes. As if it's showing further strength and it's giving a breakout, it's a fractal breakout, and there are no signs of momentum slowdown, means very simple. Is my chart showing me any contradictory signs? If the answer is no, go ahead with it. No problem. One thing I just want to mention for Right Tribe users, that your setups and Holy Grail for me are Holy Grail for me. Thanks for everything. They're not Holy Grail. It has their own strengths and weaknesses. But once you figure it out, you yourself, your own Holy Grail. I in Kolkata last year sometime, I think. And I also remember chatting with you sometime back when one couple of months you were not doing that good. Um, but what I figured out is you've learned the value of patience. Digvijay clearly wins the trophy for that, but you're also right behind him. So the holy grail is to understand when to push the accelerator and when to push the brake. I think that's that's the main thing. Um, Orithro, like Britannia today up 3%. Yeah, Britannia may be up 3% today, but do keep try and evaluate it from a slightly larger perspective. Just don't go by a short-term basis. Keep an eye on a particular stock like Britannia. I will not be able to comment, but take a look at the larger perspective from where is the stock right now, what kind of levels it is it respecting. If these levels are respected, well and good. What if these levels are not respected? Then where all can it fall? So if it falls, should I add some more at lower, something like that? Figuring out the theme, the sector, figuring out some few stocks based on the charts, adding them, keeping an eye on the overall market, not going aggressively long right now. There is no reason rational to, and let's slowly see how it unfolds. We are down, what, 20% from high to low. I just did that info line and drawing. 28% is means after today's discussion, if by the time we do part two, if the market goes down by 28%, I don't think either of us will be surprised. We will be talking, yes, we did discuss this back then. Anna? I think that's it. That's it. What I wanted to key point is do not haste. Trader, because of the range expansion, because of the way the markets had gap up and gap down, please pull yourself back. Go to the first gear. Do not trade aggressively. Try to not to trade at all. Okay? Slow down and we'll see how the market unfolds, especially the financial part. There was a small little thing which I mentioned that financials can be the strength. The financials can also be mm, the reason of a fall. Yes. Um, I do not have too much time, but I'm going to quickly say a couple of things. Is the CNX Finance meets an all-time high last month, gives a lot of confidence, but the market has lost its confidence. Does it mean that Nifty Finance is going to correct from here and use this as a distribution? If that is the case, then finance and private banks are not going to lead, and Nifty is easily heading way below where it is right now. So I think if the market cracks from high to low 20% to high to low 30%, if it cracks, it can might as well come from the strongest sector which performed in March because this was used to liquidate. So it's make or break for the finance, to be honest. From that point of view, consumption and pharma looks relatively better. ठीक है? Orithro, if I want to take mentorship from you, you will contact with you have to just contact with me. I'm just a one-man guy. I don't have a team whatsoever. So if you're there in right tribe, just DM me over there and we can discuss. ठीक है? Thank you, everyone. I think this made a little bit of sense. Do let me know your thoughts, and prep traders, join me in 15 minutes. I'm going to take up all your questions then. Thank you. Thanks for joining in. Take care. Trade well.